Hey everyone, welcome back to another portfolio update video on the channel. The portfolio is currently sitting at $7,884.87. For the day, we were up 859 or 0.11% with down 320 after hours. For the week, we are up once again. This week, we're up $60.82 or 0.78%. For the month, we are up $478.97. Look at that, 6.47%. For the 3 months, we're up $4.40 or 0.06, very small. For the year to date, aka the all time, we have closed green for the first time since September 19th of this year. Wow. So, guys, this is the first time we've been green on the all time for about 2 months now, which is kind of crazy. You can see some crazy chart action here. We've had a nice little slow melt upwards this past week, but it's finally carried us into the green. So you can see here, finally green on the all-time chart. At least we've closed green, up $11 since May 31st when I started this channel, or not this channel, this series specifically. But yeah, no, that's really exciting. So we're finally green on the portfolio. So yeah, let's just get into the positions now. So starting off with the key $9 put, that is completely worthless at this point. And we're just holding on to this again because I'd have to pay $5 to exit this because of the incremental bid-ask spread on key. Next up, we got a SoFi $6 put, which I opened, I believe, on Friday. And we opened this for $6 a credit, so we're currently flat on this option. Next up, we have a CVE $16 put. This is a new stock I'm looking at, guys. Let's take a look here. Yeah, this energy company here. So this is what I'm looking to sell some more puts on. I made a new screener to look for cash secured put stocks that I like, and I've been using that to expand my list of stocks I'm looking to sell options on. So you can see I have a little cash secured put collection here, and you can see I've added some new ones: Vail, CVE, Gold, and those are the 3 new ones that I've added here. And I've basically used my cash secured put screener that I made this week as a way of finding these companies. And I'm not sure about all of them yet, of these 3 new ones, but I do like CVE because before I'm actually selling a put, I'm going to look into it a little bit more, but I did like this one. So we had a nice red day on CVE, I believe it was Wednesday, and as a result, I was like, hey, let's jump into a cash secured put here. So we sold essentially 2 weeks out. We collected $10 of credit on a $1,600 collateral position, and currently we are up on this by $2. So there we go, another cash secured put, and it's already making us some money. And this one's flat currently, which is good because normally you open down $1 or so. So these are both looking good, both open this week. Moving on down though, we have the SPLG covered call, currently sitting at around $40 to close. We originally opened this for a credit of $10, so we are down about 300% or $30 on this position. But once again, this is a good thing because that means that SPLG is rallying a ton. And we obviously have a ton of money, basically, literally the entire portfolio is in SPLG. So, 150 shares. So by us losing money on this call, it means we're making a ton more on the shares. So we're perfectly fine with that. And I'm going to keep holding this. And it's got a 41 delta, so pretty likely that it's in the money. More likely than not that it will be out of the money. So we'll really just have to see. And I might get, if there's any kind of pullback, I might get a nice opportunity to close this out for a gain in the coming weeks, because this does expire in 2 weeks, or I suppose 3 weeks. But yeah, so just going to keep holding on to this guy. Moving on down, we have the SoFi $7 call. You'll notice I'm selling a covered call on SoFi, which means I must have shares. So you can see I have 100 shares of SoFi now, guys, which might be surprising. But basically what I did is I converted all of my options positions related to SoFi into shares. I basically added up my deltas of all of the options positions I had on SoFi, and from that number I derived what delta covered call I'd need to sell along with 100 shares to achieve the same delta, but instead of owning options, I own shares. So I did exactly that. I found out that I had around a 60 delta worth of options, long options here, because of those debit spreads obviously and stuff like that were giving me that positive delta. So with that knowledge, I basically bought 100 shares and I sold a covered call with a large enough delta that it neutralizes me back down to that same delta that I would have had by just having the options. But what this really gives us benefit wise is that we can now collect premium or rent, as some people say, on our shares, as opposed to simply holding the long position. So while we will still be holding a long position on SoFi, it is equivalent in delta, and also we will be able to collect income on it every single month. Obviously, this delta will go down as we get closer to expiration, unless it's in the money. So my delta will not always be the same as my long positions that I used to have. It'll fluctuate, and most of the time it'll actually be a lot more. But I do like this much better as opposed to holding these spreads who have very poor bid-ask spreads and were really difficult for Robinhood to price. It would sometimes cause the price of the spread to drop really low when it wasn't actually that low, and it was just really irritating to look at that in the portfolio and have it, drag down the portfolio when it wasn't actually down. So I just converted it into shares, which are much more liquid, like a 1 cent width bid-ask spread. So this is much better. We get liquidity, and now we get some income to go along with it. So I think that's great. So I'm essentially selling staggered expiry strangles, if you think about it, because I'm selling the call, but I'm also selling puts at a good strike to own more SoFi at. And I'm owning this SoFi entirely on margin, because you might notice, once again, my equity in SPLG is my entire portfolio's worth of equity. In fact, a little bit more. That's because I had to withdraw some money, but I'm actually depositing even more this Monday, so we'll actually have way more than this on Monday, over $8,000, which is exciting. So that is the reason why this value exceeds this, because I had to withdraw a little bit, but it'll be put right back in. But the thing about Robinhood Gold is you don't pay any interest on margin you're using up to the first $1,000. So I'm using that free $1,000 to essentially own SoFi shares without any kind of interest or penalties, and I'm using that free $1,000 of margin to then sell calls and collect income for essentially free. Obviously, the risk is SoFi's shares dropping, of course, and that's always the risk with buying stocks. But there is no kind of interest being paid here, and we still get the full growth of the S&P. So we're not really sacrificing anything here. In fact, we're actually benefiting from this. So I really like the system. I also opened a dollar cost averaging reoccurring investment on SoFi, so that we're basically going to be using the premiums we make from the calls and puts that we sell to just reinvest back into SoFi for what is essentially free shares. So by selling this call, I made about $45 instantly in premium, and I'm basically reinvesting all 45 of those dollars back into SoFi, which will give us, I believe, around 9 free shares or so of SoFi. A little bit less. Actually, I think a little bit more, like 9.5 free shares. So essentially by selling this, it's given me 9.5 free shares of SoFi to then eventually build up to maybe 200 shares and then sell call on that. And that's not necessarily my goal. My goal is to just gain exposure to SoFi, but do so in a way that is risk reduced. And I'm doing that through selling covered calls, using that premium to then buy shares for what is essentially free. So yeah, that is the plan. That is a new piece of the portfolio here, this SoFi share position, and I like it much better than having like 3 debit spreads, a put credit spread, and like puts, because it was kind of getting a little confusing and hard to manage. I would much rather have everything just be sold options, no long options, and then just owning shares instead, so we don't have to deal with Vega, Gamma, Theta, Delta. We don't have to deal with any of the things that go along with options, the quirkiness, and also that theta decay that we would eventually start reaching on those debit spreads. So overall, I just think this is a better option for me personally, and that is why I switched into this. I bought these shares outright. My cost basis is incorrect. As you guys, if you saw my post, I actually got assigned early on that put credit spread that I had open, because the intrinsic value was less than the actual intrinsic value of the option. So it got executed or assigned at around midnight when SoFi dropped after hours. So we did end up getting assigned on that. So I had to buy 100 shares at $7.50. And luckily for us, SoFi actually had a pop the next morning. I closed out the put that we had, the long put, as a result of the short put getting exercised. And from that, we were actually able to capture some nice upside on this day. So we got assigned around here, and I rode this up quite a bit up until probably around here. In fact, we can actually look, see when I sold that. Let me go to my history. Let's see, show more. So you can see we got, where's the assignment at? This was me buying the shares outright before that, and then we got assigned. I think I'm probably blind here. I know it's right here. There's the sell. So I guess I missed it somewhere. It's in here. It's in here somewhere. And I feel like I'm looking right at it. see if we can switch this to, no, we can't switch it to options events. Okay, well, that's the recurring investment. Well, regardless, oh, I guess it might actually appear down here, weirdly enough. Anyways, I'm just going to ignore that for now. I bought these shares, the original 100 shares outright at $6.74 a share, so that's my actual cost basis is $6.75. And if we go back here to my position, you can see SoFi is obviously well above that now. So we were able to get some nice profit on that. So we bought the original 100 shares on November 20th. Oops. Yeah, November 20th for $6.75 a share. Currently at $6.87, so we made a nice $12 already on share price appreciation, and our call option that we sold is currently making us money. So not only did we make 12 bucks on the shares we bought, we made $1 on the call already. Not to mention there's still 44 more dollars, which is actually crazy how much money that is. 44 more dollars left for us to get from this. And then, like I said, I got assigned on Wednesday when SoFi was trading, I want to say around 669, somewhere like, yeah, right here. Got assigned right here, closed out my put at open for a small loss, and then I ended up holding the shares and selling them around here. So we made another profit also on the shares we got assigned on. So that's good. So all in all, we made some profit, but that is why this cost basis is incorrect. It should be 675, and then if we include that premium we brought in on the call option, it's more like 625 or so, 630. But yeah, no, so new SoFi position is already off to a great start, up 12 bucks on the shares, up $1 on the call, still much more meat on the call as well, and some more room for appreciation. So that's looking good. All in all, though, I think that's about everything. Basically covered the new stocks I'm going to be selling cash secured puts on, which I already opened one, the new positions I opened this week, including the new move towards SoFi shares. And yeah, I think that's about everything. Once again, finally green on the all-time. We'll have to see if that holds. Check back in this weekend, and I guess we'll see. But yeah, thank you for watching this video, and I'll see you in the next one. Goodbye.